Citi just cut Netflix's price target by 13%. The same note says, buy. If you saw that headline and felt confused, you're reacting exactly the way most retail investors do. And that confusion is the whole story. On July 9th, Citi analyst Jason Bazinet lowered his price target on Netflix from $115 to $100. He also reiterated a buy rating. It's not just Citi. That same week, Oppenheimer cut their target from 120 to 100. KeyBanc cut theirs from 115 to 92. Bernstein cut from 110 to 100. All four firms, lower targets, same week, all still rating the stock a buy or outperform. If four different Wall Street firms can cut their price targets and still tell you to buy in the same week, then price target clearly doesn't mean what most people think it means. Let's break down what's happening here. This exact pattern, a number moving one way while the recommendation stays the same, happens often, and it's one of the most misread signals in investing. First, let's understand what a price target actually is. It's an analyst's estimate of where a stock will trade in about 12 months, based on their model of the company's future earnings. It is not a prediction of what happens tomorrow, and it's not a guarantee. It's one person's math, which gets updated whenever their assumptions change. The rating, buy, hold, sell, is a separate judgment entirely. It answers a different question. Given where the stock trades right now, is it still attractive relative to the risk? A stock can have its price target cut and still be rated a buy, since the rating reflects the relationship between today's price and the analyst's revised expectations. To make this concrete, let's look at Netflix's numbers. The stock closed at $73.37 when Citi's note came out. Even with the target cut to 100, that's still about 36% upside from its current price. The target went down, but the gap remains wide open. That's why the rating stayed the same. Now, why did the targets move down? Bazinet provided four specific reasons. Softer viewership trends, a perceived lack of near-term catalysts, and money rotating into semiconductor stocks instead. An M&A overhang, the fallout from Netflix's abandoned pursuit of Warner Brothers Discovery. None of these reasons indicate Netflix's business is collapsing. They reflect sentiment, timing, and current market trends. Interestingly, all four firms that cut their targets retained a buy equivalent rating, citing valuation concerns relative to near-term fundamentals. But things get messier when looking at broader views. One firm maintained a price target of $285.62 on Netflix, suggesting over 260% upside from where the stock traded. That's a $400 spread between the most bearish and bullish assessments. If you pick just one price target as truth, you're choosing one guess from a wide range, which often isn't depicted in retail apps. Additionally, on Reddit, sentiment toward Netflix dropped dramatically, indicating a larger emotional response than the actual target cuts would suggest. The story people tell each other can shift much faster than the numbers. Notice the pattern here. The facts are narrow. 4 reasons, 4 firms, 1 earnings date. But the emotional reaction is vastly broad. The gap between these two can lead to poor decisions based on misunderstandings. Here's the crucial part to reflect on. When information is mixed, a lower number next to a positive recommendation, most people don't mull over that ambiguity. Instead, they resolve it, usually leaning toward the scarier interpretation. The target got cut, so something's wrong. This isn't just about Netflix. It's a human tendency to simplify complex data under pressure. Next time you see a headline like this, ask yourself, are you truly reading the numbers? Or are you interpreting an emotional version created in seconds? You don't need to predict where Netflix goes next. Nobody watching this video needs to. And frankly, analysts have widely differing views. Good luck with that. The real takeaway? Notice when you simplify a mixed signal into a clear story and recognize whether that's your pattern. That's what WISPR helps with.